TNT Unfiltered 1. Now your hosts, Tyler Freed and Tim Lombardo.
Good afternoon, morning, evening, wherever it is you are at. Tim Lombardo here with Tyler Freed.
How we doing, everyone? We're going to go through some common questions that we get from people. And our goal here on the podcast is to provide you more than the basic level that you can read online.
Yep.
And answer your questions. And if you have any, shoot them our way and we'll get them answered for you.
And a lot of our questions or responses, rather, are going to be kind of somewhat general, but also somewhat specific to our market in the Northwest here.
Yeah, help you all understand what it's like in the day-to-day of real estate and lending.
Yep.
All right,
go ahead.
we're going to draw one here. Dun, dun, dun.
It's like drawing names for Christmas.
Ooh, I know you don't love the lender questions. Factors that influence interest rates.
Oh my gosh. Boy, you're really putting me on the spot here.
You want me to draw another one?
No, I can take the question. Factors that influence interest rates. How the 10-year trades is a big one.
Yep.
And the 10-year will typically trade based on economic data.
Okay.
Right. And so if I was to kind of just lump it all as close as I can, there's that piece of it. The Fed also sets the Fed funds rate. Right. And so typically Fed funds say, hey, we're going to raise rates. We're going to lower rates. Obviously, about 2 years ago, the Fed says, hey, inflation's running rampant. We got to start raising the Fed funds rate. And as a result, as that raises, typically mortgage rates will rise as well. That's super condensed down. There's a bunch of bunny trails you could go off on that.
Is central banking under that umbrella?
Central banking, no, that would be the Fed that does that, which is a totally different topic for a total another, not even a real estate podcast. That would be like how does a country work type perspective.
So what they're doing is they're trying to curb inflation. That's why everything has been rising. And next year we've heard there's potential for 4 to 6 rate decreases.
And so we'll believe it when we see it.
Yeah.
Right. But the economic data that's starting to come out right now is showing some softening. And so that's why the Fed's saying maybe we won't quite so much. Maybe we'll slow down and back off a little bit.
So let's bring that back to take it from 30,000 square feet down to ground floor.
30,000 feet elevation, not square feet.
Yep.
Yeah.
Right, church, wrong pew.
Because one is like a plain altitude, but what we're talking
You guys, sometimes I do this to make Tim feel good to let him correct me. 30,000 feet in the sky down to the day. Yeah. So when you get in the office and you're checking rates for the day, what does that look like? You kind of get a sheet of what par is going to be, what it's going to cost to buy down rates and stuff like that. Can you walk us through what that looks like?
Yeah. So one of the big misconceptions is like, what rate will I get? Well, the market sets the rates, right? And so based on a lot of factors, what type of loan is it? Is it FHA? Is it jumbo? Is it VA? Right? Each conventional loan, 5% down, 25% down, all those factors can have an impact and will have an impact. Is it a second home? Is it a PUD? Is it a condo? There's all kinds of factors that go into it, right? So then you've got a down payment factor. You've got a credit factor, right? So there's debt to income factor sometimes.
Yeah.
And so all those factors combine to say, I've had in single day increments, I've locked people as far apart as 1% before. And why? The multitude of factors.
And for the industry friends that are tuning in, we probably always get the question, can we get a better rate?
Yeah.
I searched online and this is what blank.com is offering. Yep. But as you're saying, it all comes from the same sheet.
It's all coming from the same sheet of music. Different lenders have different profit margins that they need to meet. But as a whole, it's very rare you'll see someone way out of the ballpark.
Yeah.
And if you see someone way out of the ballpark to the positive, like it's really, really, really good, you have to question, are they going to be able to close the loan on time? And will they close, period? Because a lot of times these internet lenders are kind of like warehouses, right? It's like when you buy something at a warehouse, you can't take it back.
Yeah.
It's like tough luck type of deal. Well, when these people decide to not close your loan, which is not uncommon, especially in this market, we've seen lenders kind of completely pull out of the business. They quote a rate and they're hoping they're going to be in business. And then it comes time and they don't close or can't close. And then as a client, you're stuck. So like we talked about in an earlier episode, do you want to trust the biggest financial decision of your life to a party that nobody else knows, right? Like typically a loan officer or an agent is referred by, an agent refers a loan officer rather, and maybe you get a referral from one of your family or friends for a loan officer or for an agent. So there's kind of some relational equity there. So they're battle tested. They've been tried and true. They've delivered on promises in the past, not just a bunch of online reviews that may or may not be real.
So in summary, the big things, the 10-year treasury follows that. And then the banking, the Fed
with what the Fed will do
is the big. And also just knowing that you want to shop rates and compare lenders on the same day at the same time because they can go up and down 10, 20 times a day, right?
Yeah. We've had a lot of market movement, especially in the last 2 years. And a second piece, just to kind of, because I did hit the two main things that make interest rates move quite a bit. In conjunction with those things, like you need to know what you're shopping for. Like what kind of mortgage are you really getting? Because that's got a really, really big impact. So
beautiful.
Thank you. I hope I answered those questions. Those were not easy ones to be put on the spot for, though. It's the rate topic is very big and very robust, but those are the two main factors that drive things. Hopefully that helped alleviate some of your questions. As always, feel free to call or text. We're always happy to help.
And I hope you all enjoyed seeing Tim on the spot as much as I did. And we will catch you on the next one. Thanks for tuning in.
I'll get you on the next one.
You've been listening to TNT Unfiltered. We hope you've enjoyed the show, and we hope you've gotten something from it. Make sure to like, rate, review, and subscribe.